Hello guys, welcome to my channel. This is Eunice Financial Academy. In today's video, we are looking at sales ledger control account. So to better understand the sales ledger control account, I'm going to break the definition into subtitles. So the first one is sales. So what is sales? Sales is the amount of money earned by a business from selling goods and services. So when a business is selling goods and services, in return, they get revenue. So that revenue is called sales. So then what is sales ledger? So a sales ledger is a group of individual credit customer accounts. So when you make your sales, you have to record them in different sales ledgers. So they are group of individual credit customers account. So now what is a sales ledger control account? A sales ledger control account is a summarized activities in the sales ledger. So it summarizes the activities in the sales ledger. So that is a sales ledger control account. So if you want to get a good understanding of a sales ledger control account, you need to start reasoning it from sales. So when you make sales, what do you do next? You record the sales. Where do you record these sales? You record them in a sales ledger. So when you record them in the sales ledger, after that, you need to check your sales, whether there is arithmetic accuracy. So the process of checking the sales or sales ledger is called the sales ledger control. You check the ones that the customers that have made payments and the one that are still owing the business. So that is the reason for the sales ledger control account. So let's look at the format of the sales ledger control account. This is the format of the sales ledger control account. So it have two sides. We have the debit side and the credit side. So looking at the debit side, let's start with the debit side. You have the balance brought down. This is a debit balance. So this balance is coming from the previous year. The debit balance from the previous year. So you put it on the debit column. And then we also have credit sales. So these are sales that were sold to customers or goods that were sold to customers on credit. So they haven't paid yet. So we write them here as credit sales. And these credit sales can be found in the sales day book. So if you want to trace this amount, you go to the sales day book, you will get this amount. And then we also have bank. We have bank. In the bank, we have dishonor checks. You can get this amount in the bank statement or the debit side of the cash book in the bank column. So the bank and cash too, we have refund to debtors. Maybe the debtors overpaid their amount, so we need to do some refund. So we do it either by card or by bank or by check. So we have interest on overdue accounts. So when the customer comes and get goods on credit, and maybe the customer is delaying to pay the goods, or maybe the terms of the credit was that interest is going to be added to it. So when the customer make or delay to pay their goods for their credit sales or the good that they took on credit, the business decides to add credit to or interest on this sales that the customer made. So this one we call them interest on overdue sales or on the customer account. It's mostly on the customer account. So let's go to the credit side. The balance brought down, this is the credit balance in the debtors account. So this is balance from the previous year. So we have the cash and the bank. This one, you get the amount from the cash book in the bank column. And then we also have discount allow. What is discount allow? When a customer comes and then buy goods, the business might decide to give the customer a trade discount. Say the customer bought the good for $10,000 and the business decided that no, you get the discount of 10%. So the 10% of the $10 is 1,000. So 1,000 is reducing from the amount that the customer have to pay the business. So that 1,000 is the discount that the business have given the customer. So the discount allow is gotten from the debit side of the cash book. And then we also have return inwards. When the customer comes and then buy goods, and then decides to return some of the goods because they were faulty or they were not the goods that the customer wanted, that is return inwards. So the return inwards is found in the sales day book or the return inwards journal. So we also have the debit, you see the credit balance in the sales ledger control account, and we have the debit balance. We have two credit balances here. We have the opening credit balance and we have the closing credit balance. So the reason for the opening and closing credit balances in the sales ledger control account is because normally the trade receivable account or the debtor account shows a debit balance in the account. This balance represents money owed by the trade receivables or the debtors to the business. So, however, sometimes trade debtors account may show a credit balance. It indicates that the business owe money to the customers. So why is the business owing money to the customers? The business may be owing money to the customer because maybe the customer overpaid for some goods or the customer made an advance payment that he have not yet collected the goods, or the customer returned some of the goods and the business have not yet refunded the money. So that is the reason for the opening and the closing credit balance in the sales ledger control account. So there are some items that are not supposed to be in the sales ledger account or the sales ledger control account. So we have cash sales. So the first one is cash sales. Sorry, cash sales. So this cash sales is not supposed to be in the sales ledger control account because it is already recorded in the cash book. So you are not supposed to take it in the sales ledger control account. And then we also have bad debts that have been recovered. Bad debts recovered. So the bad debts recovered are not also supposed to be in the sales ledger control book because this amount have already been recovered and it is recorded in the general ledger. So we don't have to record it in the sales ledger again. And then we also have increase or decrease in provision for bad debts. So we have increase or decrease in provision for bad debts. So this one affects but the general ledger. So it affects the general ledger. So we are not supposed to put it in the sales ledger control account. So those are some of the things that you need to know about the sales ledger control account. So let's look at a practice question and solution on sales ledger control account. The question says, prepare debtors control account as at 31st of December 2023. The first question, debit balance in debtors account, $66,300. So remember the debit balance goes on the debit side. So this one is the opening balance. So we write January 1st, balance brought down, amount is 66,300. So the next question is credit sales. We have credit sales $323,614. So credit sales goes to the debit side. So we have credit sales, and the amount is $323,614. So the next question is cash from debtors. Cash from debtors. So the cash from debtors is going to the credit side of the ledger account. So cash from debtors. The amount is $299,114. Why is $49? So the next question says discount allow. Discount allow of 2,930. So discount allow goes to the credit side. We have explained all those ones before. Discount allowed. So the amount is $2,930. So the next one is bad debts. We have bad debts of 3,000. Bad debts. Amount is $3,651. So we also have interest on overdue account. Have interest. Put here interest. So the amount is $277. So the next question is return inwards. So return inward goes to the credit side. So the return inward amount is $2,805. So the next question, we have credit control or the contra account. So the contra account goes on the credit side. So we put here contra. And the amount is 1,106. So cash sales. We have cash sales here. Remember, we earlier said cash sales, we don't include them in the sales ledger control account because they are already recorded in the cash book. So you are not supposed to include them in the sales ledger control account. So we have on 31st of December 2023, credit balance in debtors ledger. So we have credit balance in the debtors ledger. So the credit balance in the debtors ledger is a liability balance. It is supposed to be in the creditors ledger. So it has to be debited in the debtors ledger and credited back into the creditors ledger. So we'll debit it in the debtors ledger. So we have on the 31st, that is December 31st, we have credit control, and the amount is $815. So we have $815. So we also have 31st of December debit balance in creditors ledger account. So this debit balance in the creditors account is an asset. It is supposed to be in the debtors ledger. Good. So it has to be credited out of the creditors ledger and debited in the debtors ledger. So now we are debiting it in the debtors ledger so that in the creditors ledger we'll credit it out. So we have December 31st, we have debtors control, and the amount is $698. So the last one is 1st of January credit balance. So remember, in the debtors account we have opening and closing credit balance. So I explained the reason earlier. So we have 1st of January, January 1st, balance brought down, amount is 274. So we are dealing with the debtors control account. So the debtors control account has a debit balance. It has a debit balance, meaning the debit side must be greater than the credit side. So if we sum all this, the debit sides, we arrive at 391,704. And then if we sum all this, we arrive at 300. If we sum all this, the credit side, we arrive at 309,915. So we need to subtract this from this to get the balance carried down, or the closing balance. So we have balance carried down, which is the closing balance. If we look for the difference, we have 81,789. So if we put them together, we have 391,704. So remember, this closing balance is going to be opening balance for the next year. So we come here, 2024, we have January 1st, balance brought down equals to 81,789. And we are done with our question. So please, thank you for watching. And in case of any question or doubt, please don't forget to put it in the comment section. Thanks again for watching, and see you in the next video. And please don't forget to share, like, and subscribe. Thank you.